Welcome back to Mortgage 101, your guide to homeownership with Wilkins and myself, Todd Veinotte, on CityNews in Halifax and Ottawa. And we're going to, it's Financial Literacy Month. And one of the pillars of Financial Literacy Month, it would obviously be credit. Yeah, I think you'd agree with that.
I would say that's the number one thing that we get asked about every day.
Right, so that's the cornerstone of any deal.
It's really a cornerstone about a lot of things in your life, Todd, not just mortgage lending.
That's right.
You know, if you're buying a car, you're getting a job, you're renting an apartment, you know, you need a credit card. There's a lot, if you need to verify your identity. There's a lot of things that are involved with credit. And I think having good credit can certainly open up some doors. And I think having no credit can be very challenging. And I think having poor credit can be hard too. So,
but the bottom line is to the song, there are other chances.
Give me another chance. Give me another chance. And you know what? One wrong doesn't mean it's wrong for life.
That's
you know what I mean?
Right. Everybody makes mistakes.
Yeah, everybody makes mistakes, and we do see it. You know, we've all made mistakes in the past.
Absolutely.
So that being said, there's a lot of misconceptions out there about credit. Okay. You know, a lot of people have literally no idea what credit is. And I think there's a lot of you know, kind of misconceptions that people kind of go along in their life and they believe a certain thing. You know, they've heard that once from maybe a professional, or they've heard that from family or a friend, and they just go along with it, and it's not always accurate.
What do you mean have no idea about credit?
Honestly, like we see a lot of customers that think their credit's fine and the credit's not good. Mm-hmm. And we see a lot of customers be like, I don't know, I don't think my credit's that good, and it's perfect.
Yeah.
So I think there's a lot of people that are just not aware of what's going on with their credit. And I think that's a really important thing to just learn about, know where you're at, and know what you can do to either maintain or improve it.
Yeah. Do you feel that these types of things could be taught at the scholastic level? I'm talking education.
Definitely. Definitely.
Yeah.
You know, and I think in high school, they talk about, you know, things like income and, you know, opening a bank account and all these things, but they don't dive really into credit and what is credit and how you can maintain good credit. I think that's so important. And you always hear about these stories that, you know, 19-year-olds and 20-year-olds are maybe going to school and they get their first credit card and they max it out.
Right.
No one ever tells them.
Yeah.
And I think parents don't talk about credit enough because it's taboo.
But should they even, is that even responsible? Because a little anecdote, when I was back in the day, I did the same thing and I maxed out a credit card. Mm-hmm. And of course they started calling my parents' house, you know, looking for the collection agency when the time came, again, back long ago. And my father basically told them, he said, look.
Like 30 years ago.
Well, whatever, longer than that. But basically he said, you want to give a 20 and 18-year-old kid a credit card, and then you think you're going to expect to collect it, you're taking a big gamble, right?
Yeah, you're certainly taking a big gamble. Oftentimes the gamble works out, Todd.
No, I get it.
But I think a lot of people
something
make
to be
mistakes.
said for the right. That's the point, though. People will make mistakes at that age, Craig.
Yeah, and I think a lot of mistakes that are made hopefully are when you're young because you have time to then correct it. Mm-hmm. In Nova Scotia, the limit is 6 years to be able to collect.
Right.
So at 6 years, it's non-collectible. And if there is any derogatory things that were on that credit bureau, it's going to fall off.
Yeah.
So if there was a written off account or a collection or a bankruptcy, that would come off after 6 years.
Yeah. Do you think that's fair? Do you think that somebody? I guess it's fair to the person that's losing the obligation.
Losing the obligation, yeah. So is it fair? Is it not fair? In some provinces, I think it's 10 years.
Oh, is that right?
And some provinces, it's 7 years.
Yeah.
So I think Nova Scotia is probably one of the more liberal provinces in terms of like what that legislation looks like.
I'm just curious though why that would have been enshrined at one point, what the enlightenment would have been for the beneficiary of society, so that, you know, obviously if people are perpetually indebted, they'll never get out of that cycle, and then that's probably the envision behind it. What do you think? I know we're going to a deep dive on that.
Yeah, I think that, you know, people make mistakes. They need some time to like rehabilitate maybe.
Yeah.
And that's kind of the time frame that they have set forth, at least here in Nova Scotia.
Yeah.
You know, and you kind of touched on something there. Like there's some people that are forever indebted. Mm-hmm. And I think there's nothing wrong with a consumer proposal or a bankruptcy if you do need to have a reset. Yeah. And I think if you have to go through something like that, oftentimes it's due to health issues, loss of employment, loss of business, matrimonial breakdown. Yeah. Sometimes it's just about poor money management and poor
Yeah.
credit management.
Yeah.
But people need a reset, and that doesn't mean that you're forever in purgatory, or credit purgatory, I should say. Again, these things do fall off, and you can also rebuild your credit, which I think is important. Sometimes I see people doing consumer proposals and bankruptcies when maybe they shouldn't. I think some of these, advisors and companies that offer those services, they're doing a sale too.
Yeah, they're making money.
They're making money.
Yeah.
Do you know what I mean? By administering these programs. I really think that, if a consumer does have a lot of equity in a property, sell your property and clean up your debt. Or can you do a refinance and clean up your debt?
Yeah.
I think going to a consumer proposal or bankruptcy is kind of like that's the last
Right.
possible option.
Can you, if you wanted to keep your house though,
Yeah.
and you're going through that process, you can, from what
You can do a bankruptcy. You'd have to pay back the equity piece.
Right.
Or if you did a consumer proposal,
Right.
like that's an orderly repayment of debts, and
I
it doesn't
see.
impact the actual house itself.
Right. So, but you can't be sitting there with $100,000 in equity and say, I'm going to go bankrupt and keep that equity in that house.
No, because there is a factor where you have to pay back any of the equity, any savings.
And that would be on
Any
the
employment
sale.
income
That would,
over and
almost,
above.
for intents and purposes, lean on that.
Yeah,
sale
or
that
you
house.
or you need to pay it back. So there's certainly a time frame. So like there is like a quick release, which I think takes 9 or 12 months in Nova Scotia, or sometimes it can take up to 2 or 3 years to be released from a bankruptcy, depending on if there is an overage for the income,
Right.
or if there's an overage in terms of the assets.
Yeah.
It's all a proposal to the creditors, and the creditors have to agree
Right.
whether you're doing a consumer proposal or a bankruptcy. You just don't get absolved,
Yeah.
and the court gets involved, obviously, if it is a bankruptcy, and everybody kind of has to come together. Oftentimes there are assets, and the assets need to be liquidated to give certain like pennies on the dollar to the creditors. And I think, if somebody does have a lot of assets, but maybe the assets are tied up,
Right.
or if you're not willing or able to liquidate the assets for whatever reason, maybe a consumer proposal is the right way to go. But I do see people that do have assets that there probably was another option.
Right.
I think you need to look at all of your angles and weigh the pros and cons.
Right.
I think sometimes people don't know what the long-term implications are from some of these things. And, we touched on it before. Sometimes we have consumers that, miss a payment, and it's a very small payment, like a $10 payment. They're like, oh, well, it's only a $10 payment. I'm making my $1,000 payment, but I'm going to skip my $10 payment.
Right.
A missed payment is a missed payment.
Yeah, that's right.
Yeah.
Yeah.
And to talk a little bit about credit, there's 2 credit reporting agencies in Canada. There's Equifax and there's TransUnion. And sometimes people kind of paint them as the bad guys. It's like, well, the credit bureau's messed up. The credit bureaus, these agencies are only bringing the data that they're aggregating data for data that's given to them.
Yeah.
And sometimes there are issues on the credit bureau. There's mistakes, there's duplications, and you can get mistakes fixed. But you need to have the supporting documentation. Sometimes that takes time. Yeah. And that's why I think monitoring your credit is really important, especially if you're planning on doing a big financial transaction. You can obviously do credit monitoring, and we said this earlier in the month in our previous show. You can do credit monitoring directly with Equifax or TransUnion, but there are free apps, Borrowwell and Credit Karma. So I'd recommend consumers to download both of those and keep an eye on your credit. The credit scores in Canada are made up of a score out of 900. So 900 would be considered what a perfect score is. And there are unicorns out there, Todd, that do have 900 scores. I see them. Yeah. But good credit is typically, above 720 as a score is considered like good. Under 700, if you're like the high 600s, like 680, that's okay. When you start getting down below 680 to 600, it's kind of fair. And usually there's been some issues. Either you are very heavily indebted your limits compared to your balances. So that's one of the main cornerstones with credit. Keep the balances down. Make the payments. Obviously the payments, if you miss a payment, that's going to stay on for the 6-year period.
Yeah.
And there's other things that impact your credit, like credit inquiries. That's one of the biggest misconceptions. People think that credit inquiries is the biggest thing that's going to impact your credit.
Right.
And that only makes up about 10% of the score.
Oh, is that right? Yeah.
But there's other things like credit mix that impacts your score. And there are the addresses, like how often are you moving? And there's a new address that reported to your credit bureau. That makes a difference.
Yeah.
It all impacts how stable and reliable you are going to be as a credit risk.
Right.
Right.
Yeah, it all comes down to risk.
It all really comes down to risk.
Yeah.
And some people think that when you're getting a mortgage, if you have the most amazing credit ever, you're going to get a better rate. In our industry, typically you're either approved or declined from a prime lender.
Right.
And if you can't get approved for a prime lender, then we have to go to like a subprime or an alt A lender. And yes, that will be a higher rate. But if you're approved with a prime lender, everybody gets the same rate.
Yeah, that's right.
Everybody gets the same rate. It's not going to you're not going to get a better rate just because the credit is better.
Now, can you?
It's a yes or no usually.
It's a yes or no, but you can perhaps. Is there any negotiation at all? Because do you ever say, "Look, I've got a deal here. I've got two other lenders that want this. Can you cut us a deal at all?"
I would say no.
No.
At least for what we do, we give everyone the floor rate.
Yeah.
I know some branch lenders.
Yeah.
They start out at a higher rate, and then you like negotiate down, and I think
and that also
we're like
gives
the no haggle, you know.
Yeah.
You know, like when you're buying a car, and I think it's the old adage is like when you're buying a domestic vehicle, there's a lot of negotiation, right?
Yeah.
But when you're buying an import, usually you pay the sticker price.
Yeah.
It is what you get. With a mortgage broker, we're trying to give everyone the best rate that we can give them.
Yeah.
Us here in Halifax, we're not a discount brokerage. We consider ourselves a full service brokerage. You know, we have 2 offices and we have a lot of support and we give a lot of education. So we give the lowest rate that is available from the lenders that we do business with. Nice thing is we do a lot of business. So typically we get a very competitive rate. Are we the absolute lowest in the marketplace? No, because that's a race to the bottom. There's always going to be somebody lower, right? So we definitely give a fair price and we give everyone the floor, because we want to really think that we're giving clients, advice and service, and that the clients are going to come back and we're giving them a fair shake, right?
Yep.
Because I think if you're always racing to the bottom with the rates, next time, guess what? Somebody else is going to race to the bottom.
Yeah.
There is no bottom. The bottom just keeps on going down. So